let me welcome on board then Naveen Mathur, Director Commodities and Currencies at Anand Rathi as well, and analyze what's really happening with that asset class. Naveen, hi, good morning. Good to have you on the show. I guess, it's pretty evident that it's really all about the way the dollar is going to be moving. But what is it that you foresee? Does it seem like it's anywhere close to peaking out?
Thank you very much, and good morning to you and all the viewers. Yes, you are absolutely right. You're on dot saying that whatever we are seeing is kind of relative to what is happening to the dollar index. Let's talk about the dollar index first. We have seen the closing yesterday at around 109.956, and we are trading at around 109.55. Now, the last year of September, October, we saw the dollar index even touching 101 or so. Now, we have moved from those kind of appreciative dollar levels to approximately levels of around 200, 109 or so. That's one of the factors. Which is leading rupee to decline to all-time lows. For rupee, we are at around 86.58 yesterday closing, and we are trading at around 86.52. The interbank spot market hit a low yesterday at around 86.6953, 60 paisa decline. I would say the dollar index predominantly is the major factor, plus the recent sanctions on Russia and the crude oil prices moving upside by around 8% in the last few sessions also have impacted certain amount of, I would say, the sentiments towards the trade deficit numbers, the current account deficit numbers. So I think all those factors have led rupee to fall, but at the same time, I would like to share particularly that the rupee still holds a better stance than the other emerging market currencies. If you talk about 2024, the dollar index has gained by around 7.06%. And in rupee, we have seen a decline of around 2.88%. The January month alone is 1.35% plus for the dollar index, and a decline of around 1.14% for the rupee. The FI outflows have been very pronounced, 4 billion in the last quarter of 2024 calendar year, and I would say that 11 million. I think we have seen 11 billion kind of outflows in the final quarter and 4 billion even just in the month of January for around 11-12 days. So I think all those factors have led rupee to kind of decline against the US dollar.
Okay, point taken. But given all of this that you talked about, the various pulls and pushes at place, where do you see the rupee stabilizing, and what kind of action do you anticipate from RBI from here on?
I would say that we don't see too much. There has been limited presence. Means we haven't witnessed too much of a presence of RBI over the last couple of sessions. But as we go further, largely the dollar index would play a very, very critical role in, I would say, in deciding about the trend for the rupee against the dollar. The US dollar itself has posed 6 weekly gain the last week, and the non-farm payroll data, the unemployment numbers have been quite positive for the dollar. So I would say that dollar would continue to appreciate to an extent of 110, 111 levels. Mind you, the all-time high for the dollar was in September 2022 when it touched approximately 114.78 as a number. Now, I would say the rupee would be at around 86 levels, 85 would be a kind of a medium-term target where it should stabilize against the dollar, but it may also depreciate to an extent of around 87 or so. So I think 87 a short-term target in terms of rupee versus the dollar, but on a medium to long-term basis, we would stabilize at around 84 to 85 levels against the dollar. The Indian economy has been doing well. It's just that the FI outflows One, maybe the profit booking stance and the yields, the differential yields between the dollar and the rupee also is kind of leading to the outflows with respect to the FII money. So I think 84, 85, medium to long term would be something to watch out for.
You do, track commodities as well. Let me squeeze in a question here. Do you sense that at a time when there's so much going on with the rupee as well as the yields and, equities, of course, are seeing that big correction in an intact bull market, though, do you see that gold once again is going to turn out to be the safe haven? And can we again, get back to those record high levels?
We did saw $2,800 levels per troy ounce last year. There are a lot many factors actually which are making gold a kind of a safe haven demand, although it touched a low of around $2,630 in recent times. I would say that the geopolitical tensions, the kind of policies the new administration, the US would take post the swearing ceremony on January 20th. A lot many things would decide on that. As far as the M6 prices are concerned, we are currently at around 78, 240 levels or so. International markets are quoting at around 2,680 levels. So I think overall trend remains slightly bullish, neutral to bullish, not too much of bullishness. It's just that the dollar index, in spite of being appreciating, the gold is also being little pronounced on the upside trend. So means we see around 2,750 kind of levels in the medium term, but the long-term range would continue to be at around 2,800, 850, where the gold may stabilize. But overall, I would say that the time is right for people to start investing in gold as a portfolio diversifier. 10 to 12% should be always be invested in gold. And you have made various now instruments like gold ETFs, the gold bees and all those things, which can be helpful, including the SGBs, which would be helpful for people to manage their portfolio risk in times of adversity.
Taken. So, of course, gold remains a good diversifier and one should start allocating. Thanks, Naveen, for joining us.